Four companies that have been selected are Ajinomoto Malaysia Berhad, Malayan Flour Mills Berhad, Hapsing Industry Berhad, and Huata Industry Berhad. We choose this company to make some analysis, for example, horizontal analysis, vertical analysis, ratio analysis, segment analysis, almond desco analysis, and others. For industry outlook, food production contributes greatly to Malaysia's economy. It provides added value and market outlet for primary agricultural products and is also a source of employment. For domestic economy, the epidemic slowed down Malaysia's economic growth. The government is also committed to giving support to the people and enterprise to restart economic growth. The analysis of corporate financial statements has different use for investor, creditors, management, and the public. Ajinomoto Malaysia Berhad, Malayan Flour Mills Berhad, Hapsing Industry Berhad, and Huata Industry Berhad are all grouped together in the same industry, which is food and beverages. Malayan Flour Mills Berhad is used as a benchmark business among the four companies.
This slide about company background. Ajinomoto Malaysia BHD is a Japanese food processing firm that was established in 1961. MSG is a product that is manufactured and supplied by Ajinomoto Malaysia BHD. This product includes seasoning mixes, raw calorie, sweetener, and even organic fatty acids. Other products under this name include Kenchom, Ajisio, Ajiplus, and Seri Aji. Malaya from Mill Berhad established in 1961. MFN is a leader in the flour milling sector. MFN has branches in Burapina, Perak, Melaka, Johor, Terakam, and Pahang. In addition to the flour business, MFN has also entered the poultry business since 1983. Every year, MFN mills more than 500,000 tons of meat. Hapsing Industry BHD is one of the Malaysia leading producers of biscuit. In addition to domestic distribution, the company exports its food to more than 40 nations. Kang Hua Tan established the well-known Renew Biscuit business Huatai Industry Berhad in 1962. Built it about 30 years to the point where it was listed on the Kuala Lumpur Stock Exchange in 1992, but now it's known as Pusat Security Malaysia. This product also be effectively distributed both domestically and abroad via Huatai extensive network of distributors.
The corporate governance of Ajinomoto is the board of directors know that ethics and environmental responsibility can improve financial performance, so they conduct business in a transparent, responsible, and honest manner. Second, objective: to contribute to the world's food and wellness and to do better life for the future. Third, corporate culture. The board of directors encourages moral workplace and pay attention to the ethical behavior of enterprise operation. Next, upholding fair business practice, allow employees and stockholders to report fraud, corruption, illegal, and unethical behavior. Sustainability approach. Flour Group strives to improve its operational efficiency and resource management level through the practice of sustainable development. Second, corporate governance overview statement. Delegate the day-to-day management responsibility from board of directors to the managing director, and the managing director will convert these responsibilities to the management team. Third, risk management. The head of the group's internal audit and risk management department formulates statement of risk management and internal control. SORMI. The corporate governance of Hapsing is, the board of directors believe that greater corporate responsibility will realize the long-term value of shareholder through sound corporate governance. Second, the objective of Hapsing is to become a preeminent global company in the fields of cookies, snacks, and mixed drinks. The corporate governance of Huata is, the group is managed and led by the board. The board has the obligation and responsibility to make sure that the interests of the shareholder are preserved. Second, vision and commitment. Huata is dedicated in providing consumers with the highest quality biscuit goods while building business relationships alongside their partners. Third, ethical conduct and sustainability. To serve as a guide for all employees, a documented code of ethics and business conduct, a documented whistleblowing policy, and a written anti-corruption policy has been created.
Next is management discussion and analysis. Company policy for Ajinomoto Malaysia Berhad is to research, produce, and distribute healthful, tasty, and safe food products that fulfill worldwide national and regional standard and legislation to maintain its position as Malaysia's leading food seasoning provider. For the operating environment, according to the 2020 annual report, market instability, trade tension, and economic expansion hurts the global economy in 2019. In 2020, COVID-19 and trade tension hurts the global economy, hurting Malaysia and Ajinomoto. For the financial performance, the consumer company revenue climbed 1.8% to RM 334.4 million in 2020 and fell 7.3% to RM 309.9 million in 2021. Profit rise owing cheaper raw materials but declined because of Malaysian and Middle Eastern COVID-19 control. Next, the company policy for Malayan Flour Berhad is the food safety and standard compliance are their primary concern as food producer regardless the danger. They created the analysis and critical control points (HACCP) to give customer trust in their product. Their product are halal and expected annually by Malaysia Ministry of Islamic Development, which is JAKIM. Next, the operating environment for Malayan Mills Flour Berhad is with the rising raw material costs and reduced productivity due to the COVID-19 pandemic. Their group revenue grew 14.5% to RM 2.43 billion due to the rising commodity price and the negative effect of global weather on commodity supply. Both the flour and the poultry sector will face the uncertain headwinds. Lastly, for the financial performance, the sale climbed 14.5% to RM 2.43 billion in 2021, boosting the net financial income to 192.70 million from 132.72 million. Malayan Mills for innovation have substantially impacted the poultry consolidation challenges and competitiveness. For the 2021, the flour sales and price increased the operational profit margin. In the same years also, the low demand and increased expenses the cost of the grain trade money. Company policy for Hapseng is to ensure all the product produced by their group is halal and certified by authorized Islamic certification bodies. For the operating environment, the palm oil, flour, cornstarch, and milk powder costs have climbed. The outbreak crippled the consumer and the businesses. Thus, the firm covered its own costs throughout this exceptional and difficult time. It raised price in all market gradually from mid-December 2021. For the financial performance, the revenue dropped 9.6% from RM 295.8 million due to the full movement control order. Hapseng product sales order was delayed because of the 60% of the workforce required to achieve the FMCO level, and this infection halt the operation for 2 weeks in December 2021. Despite demand, Hapseng sales dropped. The company policy for the White Thai Industry Berhad is the strict compliance with law and regulation of both local and foreign government and authorities. For operating environment, White Thai faced labor shortage, low profit margin from severe competition, raw material price fluctuation, and consumer demand swings. White Thai Group updated the equipment and factory to boost output and to cut costs. For the financial performance, in 2021, the sales rose 14.5% to RM 2.43 billion ringgit, increasing the net financial income to RM 192.70 million from 132.72 million ringgit. In 2021, the flour sales and the price boost the operating profit. Low demand and rising costs hampered the grain trade in 2021.
Next is comparative analysis for balance sheet in horizontal. Ajinomoto had the highest, which was 124%. However, the Malayan Flour Mills Berhad, Yupsai Sendirian Berhad, and White Thai Industry Berhad recorded negative 59.99%, negative 4.93%, and negative 1.30% respectively. So it reflects that Ajinomoto had a significant increase in their property plant and equipment due to high capital expenditure in 2021 in making a new plant in Tech Park at Bandar Estate Negeri Sembilan. However, the other three industries signify a negative indication due to fewer purchase of property plants and equipment in 2021 compared to 2020. Then the trade and other receivable depicts that the MFLA had the highest receivable of 0.33% compared to Ajinomoto, which was negative 45%, Hupseng is negative 1.32%, and White Thai is negative 14.76%. Even though the trade receivable will decrease for all companies in 2021, MFLA shows the smallest differences. Ajinomoto had the highest trade and other payables, which was 51%. The Hupseng and White Thai resulted shows the 0.39% and 4.27% respectively. Then the MFLA, on the other hand, recorded a negative of 42.34%. Furthermore, the total equity shows the MFLA had the highest equity at 15.94%, and White Thai had the lowest equity at negative 8.11%. Ajinomoto and Hupseng follow with 3% and negative 0.54% respectively. Next is comparative analysis for balance sheet in horizontal. Ajinomoto had the highest, which was 124%. However, the Malayan Flour Mills Berhad, Yupsai Sendirian Berhad, and White Thai Industry Berhad recorded negative 59.99%, negative 4.93%, and negative 1.30% respectively. So it reflects that Ajinomoto had a significant increase in their property plant and equipment due to high capital expenditure in 2021 in making a new plant in Tech Park at Bandar Estate Negeri Sembilan. However, the other three industries signify a negative indication due to fewer purchase of property plants and equipment in 2021 compared to 2020. Then the trade and other receivable depicts that the MFLA had the highest receivable of 0.33% compared to Ajinomoto, which was negative 45%, Hupseng is negative 1.32%, and White Thai is negative 14.76%. Even though the trade receivable will decrease for all companies in 2021, MFLA shows the smallest differences. Ajinomoto had the highest trade and other payables, which was 51%. The Hupseng and White Thai resulted shows the 0.39% and 4.27% respectively. Then the MFLA, on the other hand, recorded a negative of 42.34%. Furthermore, the total equity shows the EMFLA had the highest equity at 15.94%, and Huatai had the lowest equity at negative 8.11%. Ajinomoto and Hyupseng follow with 3% and negative 0.54% respectively. As for current asset and liability, the companies with the highest total current asset in 2020 are Huatai Berhad 66.37% and Hyupseng Berhad 63.33%, followed by the EMFLA 49.12%. And the company with the lowest percentage is Ajinomoto Berhad 45.47%. In 2021, the companies with the highest total current assets are Huatai 67.70% and Ajinomoto is 67.43%, followed by Hyupseng. In the year of 2020, the companies with the highest total liabilities are Huatai, which is 62.84%, and EMFLA 54.88%. However, in the year of 2021, the companies with the highest total liability will still be same ones, which is Huatai, which was 67.63%, and EMFLA is 50.56%. Then the Huatai Berhad and EMFLA, on the other hand, will have a tough time meeting their short-term financial obligation. If a company has a significant surplus of current assets relatively to its current liabilities, this is a strong indicator that the company should be able to satisfy its short-term commitments.
Moving on, I will talk about the income statement analysis for both vertical and horizontal of the 4 companies. Based on the horizontal analysis of income statements of 4 companies in 2 years, stated that the EMFLA companies have the highest percentage ratio in revenue, which is 14.53% compared to others which have negative value percentage, which is negative 2.10% for Huatai Berhad, negative 4.02% for Ajinomoto Berhad, and the smallest is negative 9.62% for the Hyupseng Berhad. Other income is money a company makes outside of its main operation, such as interest. Other sources of income include interest, rental, and capital gains. For the other income, the highest contributor in revenue is 20.24% by Hyupseng, and this is followed by EMFLA, which is negative 6.49%, and the smallest percentage is the Huatai Berhad, negative 53.99%, and Ajinomoto Berhad, negative 54.50%. Next, the vertical analysis of income statements of 4 companies in 2 years shows that the cost of goods sales is the highest for Hyupseng Berhad, which is 68.05% in 2020 and 72.39% in 2021. This indicates that there might be a chance for Hyupseng Berhad to use the LIFO method to reduce tax. If a corporation's cost of goods sold is higher, then the company will owe less in taxes. It is important to keep the cost of goods as low as possible in order to maximize revenues. The percentage of the cost of goods sold is lower for Huatai Berhad, which is negative 70.10% in 2020 and negative 74.25% in 2021, while the lowest are EMFLA Berhad, which is 89.92% in 2020 and negative 88.22% in 2021. There is no information on Ajinomoto Berhad. The highest gross profit is Hyupseng compared to others, which is 31.95% in 2020 and 27.61% in 2021. It is shown a little decline since the cost of goods sales slightly increased. This was followed by Huatai, which is 29.90% in 2020 and 25.72% in 2021. Although there are slight decrease of 40.18%, this is expected since the cost of goods sales are lower, while for EMFLA, the gross profit is the lowest, which is 10.08% in 2020 and 11.78% in 2021. Next is the cash flow horizontal analysis. Malayan Fla Mills Berhad had the highest profit before tax with 538.90%, while Hyupseng had the lowest with negative 32.32%. Ajinomoto and Huatai meanwhile had negative 21.21% and 0.76% respectively. Additionally, the operating profit before working capital changes shows that EMFLA had the highest operating profit, which is 77.37%, while the remaining corporations including Ajinomoto 10.29%, followed by Hyupseng 28.89% and Huatai 0.56%. And they had negative operating profits. Apart from that, Ajinomoto had the highest net cash used in investing activities at 321 199.44%, while EMFLA had the lowest at 199.57%. Then Hapseng and Huatai were recorded at 18.47% and negative 0.77% respectively. This is because Ajinomoto used more cash in the purchase of property, land, and equipment, resulting from the high cash used in investing activities. For the current ratio, Ajinomoto Berhad has the highest current ratio in 2020, which is 5.49% compared with the other three companies, but it has declined to 3.26% in 2021, showing 2.23% differences. Hapseng Industries has climbed up as much as 0.29%, making its current ratio in 2020 increase from 1.80% to 2.09% in 2021. The current ratio for both EMFLA Berhad and Huatai Industries was the same in 2020, which is 1.09%. In addition, EMFLA Berhad current ratio has increased slightly from 2020, which is from 1.09% to 1.22% in 2021. Huatai Industries shows a drop of 0.05%, making the current ratio in 2020 1.09% to 1.04% in the following year. However, among the four companies' current ratio analysis, Ajinomoto Berhad remains the highest for both years, and we can conclude that Ajinomoto Berhad has the most capacity to settle its short-term debts as well as those that were due within 1 year. For the quick ratio, Ajinomoto Berhad has the highest quick ratio in 2020, which is 4.74% compared with other three companies, but it has declined to 2.71% in the following year. Hapseng Industries has climbed up as much as 0.19%, making its quick ratio in 2020 increase from 1.43% to 1.62% in 2021. EMFLA Berhad quick ratio also has increased slightly from 2020, which is 0.72% to 0.80% in 2021. Huatai Industries shows a drop of 0.07%, making the quick ratio in 2020 was 0.85% to 0.78% in the following year. However, among the four companies' quick ratio analysis, Ajinomoto Berhad remains the highest for both years, and we can conclude that Ajinomoto Berhad has the most ability to fulfill its short-term commitments.
Moving on to asset management, the account receivable turnover ratio for Ajinomoto Malaysia Berhad rose by 1.14 times. The account receivable turnover ratio for Malayan Flour Mills Berhad declined by 0.6 times. For the Hapseng industry, it also declined by 0.77 times. Lastly, for Huatai Industry Berhad, the account receivable turnover ratio is rise by 4.3 times. The average account receivable turnover ratio for the four companies is 5.95 times in 2020 and 7.37 times in 2021 respectively. The account payable turnover ratio for Ajinomoto Malaysia Berhad is declined by 0.29 times, while for Malayan Flour Berhad is rise by 1.17 times. For Hapseng Industry Berhad is declined by 1.2 times, and for the Huatai Industry Berhad rise by 0.5 times. The average of account payable turnover ratio for the four companies is 5.98 times in 2020 and 5.95 times in 2021 respectively. The inventory turnover ratio of Ajinomoto Malaysia Berhad is rose by 0.2 times, while for the Malayan Flour Mills Berhad, the inventory turnover ratio is rose by 0.58 times. For the Hapseng Industry Berhad, the inventory turnover ratio is declined by 1.2 times. And lastly, for the Huatai Industry Berhad, the inventory turnover ratio is declined by 0.63 times. The average inventory turnover ratio for the four companies is 4.85 times in 2020 and 4.68 times in 2021 respectively. The total asset turnover ratio for Ajinomoto Malaysia Berhad is declined by 0.03%, while for the Malayan Flour Mills Berhad, the total asset turnover ratio is rise by 0.11%. For the Hapseng Industry Berhad, the total asset turnover ratio is declined by 0.14%. And lastly, for the Huatai Industry Berhad, also declined by 0.03%. The average total asset turnover ratio for the four companies is 1.04% in 2020 and 4.07% in 2021 respectively.
Next, I will move to solvency or leverage ratio. First is debt ratio. The debt ratio of Ajinomoto Malaysia Berhad is 14.6% in year 2020 and rose to 29.58% in year 2021. The debt ratio of Malayan Flour Mills Berhad is 54.88% in year 2020 and decreased to 50.56% in year 2021. Debt ratio of Hapseng Industry Berhad in year 2020 is 38.9% and decreased to 22.93% in year 2021. The debt ratio of Huata Industry Berhad is 62.84% in year 2020 and rise to 67.63% in year 2021. The average debt ratio of 4 companies is 42.81% in 2020 and 42.67% in 2021 respectively. Second is long-term debt to equity ratio. The long-term debt to equity ratio of Ajinomoto Malaysia Berhad is 2.73% in year 2020 and rose to 22.19% in year 2021. The long-term debt to equity ratio of Malayan Flour Mills Berhad is 21.33% in year 2020 and declined to 14.34% in year 2021. Long-term debt to equity ratio of Hapseng Industry Berhad is 5.96% in year 2020 and declined to 5.21% in year 2021. Huata Industry Berhad has a long-term debt to equity ratio at 163.41% in year 2020 and rose to 202.04% in year 2021. The average long-term debt to equity ratio of the 4 companies is 48.36% in 2020 and 60.95% in 2021 respectively. Third is debt to equity ratio. The debt to equity ratio of Ajinomoto Malaysia Berhad is 0.17 in year 2020 and rise to 0.42 in year 2021. The debt to equity ratio of Malayan Flour Mills Berhad is 1.22 in year 2020 and declined to 1.02 in year 2021. The debt to equity ratio of Hapseng Industry Berhad is 0.64 in year 2020 and declined to 0.49 in year 2021. The debt to equity ratio of Huata Industry Berhad is 1.69 in year 2020 and increased to 2.09 in year 2021. The average debt to equity ratio of the 4 companies is 0.93 in 2020 and 1.01 in 2021 respectively.
6.4 profitability of gross profit margin. Ajinomoto Malaysia Berhad gross profit margin is 11.64% in 2020 and increased to 12.80% in 2021. Malayan Flour Mills BHD increased from 10.08% in 2020 to 11.78% in 2021. Hapseng Industry Berhad decreased from 31.95% in 2020 to 27.61% in 2021. Huata Industry Berhad gross profit margin will drop from 25.75% in 2020 to 29.90% in 2021. The average gross profit margin ratio of the flour company is 20.89% in 2020 and 19.49% in 2021 respectively. Profitability of operating profit margin. Ajinomoto Malaysia Berhad's operating profit margin ratio is 16.84% in 2020 and will drop to 30.82% in 2021. Malayan Flour Mills BHD increased marginally from 5.67% in 2020 to 7.55% in 2021. Hapseng Industry Berhad will decrease from 15.90% in 2020 to 11.74% in 2021. Huata Industries Berhad has a small improvement from 1.48% in 2020 to 2.66% in 2021. The average operating profit margin of the 4 companies is 9.97% in 2020 and 8.94% in 2021 respectively.
Moving on to segmentation, to begin with, Ajinomoto Berhad in 2020, the revenue from the consumer is higher than revenue from industrial by 44.87%, which is 72.43% is from consumer and 27.56% is from industrial. In 2021, the revenue from the consumer also higher than revenue from industrial by 39.87%, which is 69.93% is from consumer and 30.06% is from industrial. The huge differences of the percentage are because in consumer segment, products are often straightforward so that they can be marketed to a wide audience, and consumers are usually convinced and influenced by external factors like social or psychological. While in industrial segment, the product made are highly specialized and it requires the purchase and sale calls for an in-depth understanding on the side of both parties and the buyers. For Malayan Flour Mills Berhad, revenue from external customers has the highest percentage in 2020 and 2021, which are 99.71% and 99.21% compared to other segments, although it will decrease by 0.5% in 2021. However, contribution by intersegment revenue is the lowest in 2020 and 2021, which is 0.29% and 0.79% respectively. In 2021, it will increase by 0.5% only. Because of intersegment revenue decreases, it might be caused by salesmen that don't get along with customer service agents, hence resulting in low services level and affect percentage. Next is Hapseng Industries Berhad contribution by Biscuit Manufacturing Division segment decreased from 49.31% in 2020 to 48.18% in 2021. Beverage Manufacturing Division segment to revenue increased from 1.48% in 2020 to 1.56% in 2021. Same as Trading Division segment to revenue increased from 49.21% in 2020 to 50.25% in 2021. Lastly, for Huatai, in 2022, revenue from external customers has contributed 84.11% to the business segment of Huatai Industries, but this has dropped to 83.96% in 2021. In contrast, the inter-segment revenue contributed 15.89% to business segment in 2020 and rose to 16.04% in the following year. To summarize, we can say that Huatai managed to sell the goods to the customers as the revenue from external customers is the main contributor to the company's business segment.
Moving on to financial position and performance. For the benchmark ratio analysis, we choose Malayan Flour Mills Berhad for our benchmark company because it have the high score in overall ratio and smaller percentage of overvalue number in terms of the fair value compared to the Ajinomoto Malaysia Berhad and Hapseng Berhad. Meanwhile, the data for the fair value of Huatai Industry Berhad is insufficient, and this company might estimated as unprofitable currently. Moving on to the Altman Z-score analysis, the Altman Z-score predict a company 2 years bankruptcy risk. For Ajinomoto Malaysia Berhad and Hapseng Berhad, both of the company are in the green zone, meaning to say that they are protected from the bankruptcy. Malayan Mills Flour Berhad is in the gray zone, indicating that the company may go bankrupt in 2 years. For the Huatai Industry Berhad is in the red zone, indicating the company is approached to the bankruptcy.
SWOT of Ajinomoto Malaysia BHD. The wealth of a high quality of e-product, processes, replication, and intangible assets and brand barriers are all essential variables that contribute to its trends. In the winners, Ajinomoto more really on expertise to promote their product. This company spent a lot of money on expertise. In the opportunity, Ajinomoto can develop the company's sustainability by introducing new products. In the threat, natural dissenters and unexpected situation has a variety of in fact business operation. SWOT of Maya from UBHD. In the strength, the ability and resources processed to design, develop, and preserve a competitive edge in the market are the company's greatest asset. In the awareness, the manager also had confused in short term of which makes the company strategic planning also effect due to the still city resources in Malaysia. In the opportunity, cooperation with regional company may provide opportunity for the expansion of company on the world stage. In the strength, companies may experience still workforce issues soon due to increasing staff turnover and increased reliance on British. SWOT of Hapseng Industry Berhad. The strength of Hapseng is its wide geographical distribution. After that, the growth of customer and the low customer retention rate are the weaknesses of Hapseng. In the opportunity, as a result of the increase of technological innovation and progress, Cyberan can now produce a variety of goods and services. Finally, one of the strengths faced by Hapseng is that the urban market is saturated and the rural market is stagnant. SWOT of Huatai Industry Berhad. In the strength, Huatai Industry Produce has a strong brand awareness. In the winners, competitor in the food processing sector can readily copy the business model of Huatai Industry. In the opportunity, online spend possibility customer increased use of online service will allow customer to give new offering to customer in the food processing business. In the strength, the major problem for Huatai Industry and other industry participants is the staff short cap.
Then, for the recommendation for the company Ajinomoto is, we have suggested that Ajinomoto need to expand its market internationally. By building business ties with other nations will enable them to widen their network. The company will profit from the market expansion because both the population and the customer base will occasionally grow. By using innovation in its product offering, the company should make decisions based on research and development R&D to make sure that it focuses on the business rather than just the seasoning business. The company should establish a division that is responsible for keeping track for customers' demands and ensuring that they are met in a time mannerly. By using innovation in its product offering, the company should make decisions based on R&D to make sure that it focuses on other business rather than just the seasoning business. The company should establish a division that is responsible for keeping track for customer demand and ensuring that they are met in a time mannerly. Besides, the recommendation for Malayan Flour Mills Berhad is working on a price adjustment proposal as one of several measures to reduce business uncertainties caused by volatile commodity price as a global economy deals with lingering effect of COVID-19 driven movement restriction. MFM intend to drive more efficient trade spend to protect their profit margin. The partnership with Tyson, which is international holding company, which have a positive impact on the poultry integration business, enabling MFM to take advantage of their strength and technical know-how to boost sales volume, enter export markets, and enhance operational effectiveness. Apart from that, MFM's proactive efforts to improve feed quality and its investment in the best cutting-edge technology through the use of the Internet of Things and artificial intelligence to upgrade its existing broiler farmhouse to improve efficiency and performance are among its measures to mitigate uncertainty. They declared that MFM will keep collaborating with reputable vaccine manufacturers to put into place a comprehensive vaccine program to prevent diseases from its poultry farms. Moving to next recommendation, which is for Hyupsang. Hyupsang can make plans to improve the quality of its product, broaden up the scope of its product offerings, manage costs, and expand its distributor network. By 2020, a new cracker line is expected to be in operation. Additionally, it is experimenting with new recipe to broaden the scope of its product offering, which should help to increase the efficiency of its baking lines. The company can also make plans to increase its presence on store shelves in Kuala Lumpur and Johor, particularly in supermarket, in brand new malls, and convenience stores in residential areas. Then the recommendation for Huatai Industry Berhad is most typically scenery is when a company manages its debts reasonably well and it's in its favor. When analyzing a company's use of debt, we start by combining cash and debt of Huatai. According to our analysis, Huatai might have been overvalued. Over the course of a year, the debt held by Huatai Industry Berhad increased from 20.2 million to 23.9 million. Contrarily, it has 5.29 million in cash, resulting in a net debt of roughly 18.6 million. The most recent balance sheet reveals that Huatai Industry Berhad had liabilities totaling 41.3 million that were due in within a year, and 2.28 million that were due after that. It had 5.29 million in cash and 20.5 million in account receivable that were due in the next year. To offset this, in other words, its liability total 17.8 million, more than its cash and short-term receivables put together. In conclusion, Malayan Mills Flour Berhad will act as the firm that serves as the benchmark because it is the greatest choice and has the best performance when compared to the performance of other companies. According to the company's financial statement, Malayan Mills Flour Berhad has the largest percentage of revenue in the comparative analysis of income statement, as well as the biggest profit before tax and operating profit before working capital changes in the comparative analysis of cash flow. In addition, Malayan Mills Flour Berhad has the highest high growth earnings that are anticipated to expand significantly over the next year. Furthermore, the Malayan Mills Flour Berhad's revenue is forecasted to grow faster than the present market, which is forecast to grow at the rate of 6% each year.